Yo, what is going on YouTube? I am Germ here, as you guys can see up on the screen. Today, I want to talk a little bit about Sofi Technologies Incorporated. This is ticker symbol SOFI for those of you that don't know. And one of the reasons why we're talking about Sofi today is that, hey, it actually had a good day, and not just a good day, a really good day. You know, there's been so many red days, so many days of SoFi underperforming the market, even on green days. And yes, you know, 3.93% is a really, really good day. I know there will be some people that say, oh, 3%, that's nothing. You know, we want 5% or 10% or 20 or 50% or whatever. But okay. 3.93% is a really, really good single day for an individual stock. And then when you look at the broader market and see that, hey, everything was up today. You know, everything was green. Dow Jones up 1.45, S&P up 1.61, NASDAQ up 2.15, and the Russell up 2.04. Still, SoFi was outperforming all of those, you know, by a significant margin, by like at least 1% or close to 2% on all of those major indices. So this is a really, really good day for SoFi. This isn't just them being up because the market's up. This is, you know, some SoFi specific stuff carrying them even higher than the actual general market was up. So I think that's really, really cool. And there's some stories to talk about in today's video. So definitely drop a like if you guys do enjoy it. I would appreciate that so much. Subscribe to stay up to date on all my latest content. And of course, as always, there's not going to be any financial advice in this video. I'm not telling you guys to buy anything, not telling you guys to sell anything, nothing like that. Just going over the latest and giving some of my thoughts and opinions on some stories and some news, stuff like that. With that being said, let's get right into this. So what is kind of, you know, not great is despite a really, really good day for SoFi today, they are down 1.21% after hours. So, you know, we'll see if any negative momentum leaks over into tomorrow, you know, kind of where this thing's looking at tomorrow, if we're going to be able to string a couple of green days together, because that's what we're going to need ultimately, especially, you know, when you start looking at the fact that we're down 5% in the last week, we're down 22% in the last month. And we're down 52.74% year to date. You know, this is not something that's going to be fixed by a single 4% update. This is going to need, you know, some green weeks in a row, if not some green months in a row, obviously to erase 52% downward, you know, moves in 3.5 months. This is a very, very short amount of time that this thing has gone down 52%, but they're not alone. Obviously, 2022 has been rocky waters for a lot of stocks, but this, I thought, was actually a very, very interesting article from Investor Place. Just even the title obviously caught my eye. They said, it's risky to not own shares of SoFi Technologies. Now, obviously, there are a lot of people out there who share kind of similar ideology to this in the market right now, but there's increasingly few people that are saying stuff like this. And I mean, that just makes sense. You know, when the stock goes down 52% in you know, 3.5 months or whatever, that is people being pessimistic about the stock. That is people selling out of the stock. That is people not being as interested in buying it. That is people, you know, buying it for lower and lower prices and selling it for lower and lower prices. There is a lot of negativity surrounding not only SoFi, but a lot of the stock market in general right now. So there's not a lot of people saying, you know, it's risky to not own shares of SoFi. If there were, then the price would be going up all the time and the price would be exploding and it would be at all-time highs, not all-time lows. But this article, you know, is obviously telling a little different story than I guess you would hear in the market right now. But they do say SoFi continues to smartly build its ecosystem. Bears in SoFi have macro price action and company-specific challenges to counter. And shares of SoFi offer growth at a compelling discount for long-term buyers. So let's see what they have to say a little bit in this. Stadium rights have made SoFi a fixture in Los Angeles. But today, regardless of whether or not you're a sports fan, SoFi is a compelling buy for growth stock bulls looking for a long-term win. In the midst of bearish inflationary data, spiking treasury yields, and a mixed start to the earnings season, stiffer, broader based losses on Wall Street haven't been lost on SoFi stock. Geopolitical tensions and a COVID resurgence have contributed as well. Shares of the fintech firm lost more than 27% over the past 2 weeks. Even worse, the price action has taken out its March bear market low of $7.74 per share. Today, we saw more of the same with SoFi stock off another 3%. Today, though, let's review what's going on. So they say that SoFi does have the goods, and you know that's good to hear. There are SoFi bulls, and then there's Investor Place's Luke Lango. He has been bullish on SoFi's future, going so far as to call SoFi stock the Amazon of finance. And that's obviously something we've heard a lot of other people say, the Amazon of finance, you know, the AWS of fintech or whatever. That would be huge given the reach of the tech giant, as well as today's mid-cap $6.6 billion valuation versus Amazon's $1.5 trillion value. Now, I don't think anyone, even this guy, is saying that, SoFi is going to become Amazon. They're not going to grow from 6.6 billion to 1.5 trillion, probably. But there's just some comparisons, and it is kind of maybe a good comparison, or at least an interesting comparison to, the kind of goals they have, the suite of products that they want to offer, how they really want to be, all encompassing, how they want to be your one-stop shop for everything, kind of similarly, obviously, to how Amazon runs their stuff. The thesis is that much like Amazon's original book business, SoFi is so much more than its initial student loan business. There's definitely something to SoFi stock being more than a one-product pony, and obviously this is something they're actively working on improving, daily, it seems like. SoFi has turned itself into a digital-first ecosystem of services that products that has continued to grow smartly. In fact, in 2021, SoFi saw revenue climb nearly 73% year over year. Obviously, very, very crazy growth. It doesn't stop there either. SoFi is further building on that reach this year with its long-awaited banking charter approved in January. That was a huge deal that people were waiting on for so long. There's also its more recent Technesis acquisition. This is all stuff we already know, which will allow SoFi to offer multiple standardized and fully customizable fintech products. Toss in a recent seal of approval for Anthony Noto from CNBC's Jim Cramer as shares fetch roughly $8 a share. And today's $7 SoFi stock looks like growth at a discount opportunity. SoFi stock less than perfect other truths. It's not just a student loan moratorium that bearish or less enthusiastic SoFi stock investors have been betting against, but on the back of the student loan payment pause extension this past week, management did have to acknowledge its impact. The company reduced its outlook for the future for 2022. SoFi bears can point out other challenges too, from competition and rising customer acquisition costs to a shakier home loan business amid ramping up mortgage rates. SoFi stock remains a growth play with other less than perfect truths that includes a lack of profitability and negative cash flow. So, a lot of not necessarily great things. Some of those I do think are contained in a shorter time frame. Some of those are things that they will be able to get through, like the student loan moratorium eventually is going to end, or eventually some conclusion will be reached there. Obviously some of the other stuff they talked about, like the pandemic, inflation, recession worries and fears. Hopefully that's all stuff we can get through. Some of this other stuff might not be going away as easy. Things like, lack of profitability, negative cash flow, customer acquisition costs. Who knows how that stuff's going to go. But just because SoFi is pushed down and down and down by a million different issues right now, some of these issues are not long-term. And, if you're a long-term investor, then I don't necessarily think short-term issues and short-term, worries are necessarily the most important things, at least in my opinion. Then there's a SoFi price chart. In the near term, it may be too soon to expect the fintech's cheer section to beat back bearish short interest of 14% in the stock's days to cover ratio of 2. Today's shares of SoFi sport a weak-looking Bollinger Band structure and bearish stochastics crossover, coupled with a questionable market environment and a weekly candlestick hinting of a reversal pattern. Bullish buyers should expect more pain before seeing long-term gains in SoFi. But here is the SoFi stock takeaway. Not only has the fallout been tough for SoFi the past couple of weeks, but it's also been challenging for all of the company's long-term stockholders. An investor that bought SoFi shares at the all-time high is sitting on a loss of 75%, which is crazy. The good news is that Amazon stock lost upwards of 90% back in the dot-com era before becoming something slightly more important globally. And that's a really, really key important point. That doesn't mean that, hey, just because SoFi is down 75%, they're going to, be up hundreds of percents in the future. Obviously, some companies go down 75% and then go down more and then go down more, and then they never rebound. They never come back. But we have seen time and time again, stocks have massive downward movement, 10, 20, 30, 40, 50% plus down. And these are still great companies. These are still companies that go on to have awesome futures, have awesome growth, especially for the case like SoFi right now, where not necessarily all of their losses or all the downward movement in the stock price is necessarily SoFi related news. Again, the S&P, has had like kind of a really, really rough start to the year. And obviously, if the S&P is down 8 to 12%, more speculative stocks like SoFi are going to be down at least 20 to 30%. Now, maybe there's been some other moves and news that's pushed it down to 30, 40, 50, 60% down on the year, but it has been kind of a tough environment, especially for unprofitable speculative companies like SoFi. This guy does say net, he is a buyer in SoFi in an obviously uncertain market, but I'm more pragmatic about the stock's $1 trillion potential, as well as its ability to make a more vomit-inducing decline if Amazon's storied past and SoFi's price charts are any indicators. Bottom line, should today's starter purchase somehow make bottom picking appear easy, don't be quick to take profits. Refer back to SoFi's price chart in the market for reasons to add strength rather than to rely too heavily on much trickier Amazon parallels. So again, they are saying, hey, it might be a little bit risky to not own shares of SoFi when you're talking about the potential that this company has going ahead in the future. And they even say themselves that, hey, things are probably going to go lower before they go higher, but they still seem interested. Because again, picking the exact bottom is going to be tough. But, if you are holding this thing for years and years and years, then finding the exact bottom, whether you bought on, April 19th or May 3rd or whatever, you're probably not even going to remember or care that much 10 years from now or 20 years from now or whatever if this thing really does explode. We also had, Investor Place talking about why SoFi stock was in the spotlight. This was actually from yesterday. People talking about why SoFi stock closed down 2% despite promising new cashback announcement. And, it just kind of shows that, yes, even though whether you're putting out good news, bad news, whatever, your stock can still go up and down. It's just one of those really weird times in the market. But it seems like over the past couple of years, we've always had weird times in the market. We've had, in the last 3 years, we've had times where bad news make your stocks go up. Now it seems like good news make your stocks go down. It's just all over the place. Eventually, we're probably going to get back to something more normal or maybe just more towards a bull market. Who knows? Could be weeks, could be months, could be years. But just understand that the stock market doesn't always necessarily make sense. We also have performance-based stock compensation. This guy says, I don't think people are doing a lot of DD on SoFi, so I've seen multiple times already that SoFi should be doing stock-based compensation based on performance. They are, at least in the stock price aspect, and only what is published here. The numbers as of March 15, 2022, this does not include all PSUs SoFi granted, but only certain execs. They have Noto at almost 6.5 million, 800,000, 600,000, 600,000, 750,000. All these PSUs will begin investing when SoFi's volume-weighted average closing price will be over certain prices over a period of 90 days. The price targets for these PSUs are $25, $35, and $45. The second criteria for the vesting of these PSUs is holding the standard of a bank holding company. In 2021, SoFi has granted 23 million PSUs, none vested yet, while 170,000 were forfeited. This probably doesn't take into account Maria moving to GoPuff, possibly for reaching the price goals as well. All this data is from SoFi's filing in March of 2022. Certain NEO, named executive officers, PSU compensation data is located on page 183. SoFi also has different goals set for different execs, but those are in a different filing. This guy says he also missed a corporate performance, but those are for cash bonuses. Just kind of a whole deep dive. The top comment here says the 325 million SBC most people are referring to are the RSU, restricted stock units, I believe it is, which do not require a certain price target. They are simply vested over time. The PSU you have quoted are additional awards executives will get once stock hits a certain price. Just again shows you how generous SoFi has been giving out these stock awards. Now, I think there's two ways to look at this, and this is what some people have said. It's like, hey, if you're only handing out PSUs and it's only for hitting certain price targets, especially $25, $35, $45, well, hey, the stock's at $7.40 today. If you're only handing out those, that's going to piss some people off. Those are, potentially never going to cash, if not, 2, 3, 4, 5 years from now. People aren't really going to accept that as compensation. You're going to have to give out some of those RSUs. Obviously it is a big talking point. SoFi has definitely had too much SBC, but they also need to keep talent. They also need to go out and get the best of the best to be able to achieve their goals and their growth and everything they want to do. So it's kind of a catch-22. Do you not do the stock-based compensation to keep the shareholders happy because you're not diluting, but then you don't, accomplish everything you need to accomplish? Or do you give out that SBC to hopefully accomplish the things you want to accomplish, but then you're diluting your shareholders, so the gains don't really matter as much? I don't know, but this was at least one person's kind of take and at least some of the numbers behind what they were seeing in terms of SBC that SoFi is doing. Obviously, SoFi says going into the future, they're going to get their SBCs under control, but we'll have to wait and see. Pretty much over this video today, guys. Let me drop a like if you did enjoy it. I would appreciate that so much. Leave a comment down below. Let me know what you think about SOFI. I'd love to hear your guys' thoughts and opinions. Subscribe, stay up to date on all my latest content. Hopefully catch you guys in the next one. But until then, peace.